welcome. So I just want to thank you for coming and joining me live here. So I won't wait too long, but I do want to start really soon. I know this is a Friday night. I just want to thank you. If you're watching this, I'm really happy to have you come and join me. Okay? So just give me a quick moment while I just set things up and let's get started. All right? Let's get started. Okay. Let me know if you can see me. Okay. Let me know if you can see me. All right. So let me just share my screen with you. Okay. So I think most of you are here to answer this question. Why home prices hasn't collapsed. In fact, I just want to give you a brief backstory. So I have been seeing this very often. Receiving this question very often, from a lot of clients recently about, hey, how come the home price haven't crashed? Everybody has been waiting for it, and I just want to kickstart it right away so I don't take up too much time. Okay. So just as a disclaimer, I just want to say that this right here, Amici is sharing is for informational and educational purposes only. All right, I just want to share based on my opinions and my research I've done and why I believe home prices have not collapsed. And the certain areas that I'll be talking about what's keeping the prices afloat. All right. Now, let's talk about this. I call it coffee shop talk. Okay, so what coffee shop talk to me is basically hearsay, things you might have heard from your friends. So a lot of times, a lot of people get their investment advice from people, maybe their friends they meet at a coffee shop, or maybe the taxi driver and stuff like that. But what is the word on the street right now that you might be hearing from your friends is that, hey, property prices will collapse. Property prices will collapse. Now, if you have heard this from someone either a friend, a banker, or maybe even some of a client, if you are a property agent, let me know in the comment section if you've heard this story from someone before saying that property prices will collapse or crash. Let me know in the comment section. All right. So there's usually about 10 seconds lag time before I can see your guys' comments. So don't mind if I just take a pause because I do want some interaction and just to hear from you guys as well. Okay? And just let me know in the comment section, all right? Okay, so why I'm sharing you with this is because a lot of times people hear hearsay. They hear rumors or things that they hear people talk about at a coffee shop, but it's not really verified. Now, I always like to do my research and I always like to take a look at what's the information in the news that's really out there, the facts, the numbers that's out there. So let's take a look. In Singapore, there's two main markets that people usually invest or people usually buy into. Okay, this is the stock market and the property market. Okay, right now we are already past the first quarter, so all the results for the first quarter are already in. And if you've been keeping up with what's been happening right now, you will know that the stock market or STI versus the property market. So what's the results? STI, okay, the stock market has actually dropped around 36.9% since January, but the property price index has only dropped 1.2%. Most people, when they see this, right, all they think about is, okay, drop 36% off, okay, drop 1.2%. But we need to understand a little bit deeper. We need to understand why, if really a recession does happen, everything's supposed to crash. Okay, if really that stock prices and property prices are linked to the economy, and they should fall at the same rate. Am I correct? Or at least close. But why is there such a big difference? There's almost a 35% difference between the stock market and the property market. We need to ask ourselves why, and I'll be actually explaining to you and through my research that I've done, why I believe this is so. Okay? Now, what I want to ask you is this before I move further. Just let me know in the comment section below, between the stock market and the property market, which is more resilient? If you think it's stock market, type in stocks. If you think it's property market, type in property. Okay? Let me know in the comment section which market you think is more resilient or resistant based on the data you're seeing right now. Let me know in the comment section below, guys. Yeah, don't be shy. Feel free to engage with me. I don't bite. I don't bite in any sense. Okay. Based on the data. Okay. So I think if you've selected property, there's some area that I am more that I would think is more resilient based on the data that I'm seeing right now. Okay. And what I'll be explaining to you, okay, is the difference. So I actually look at all the crises, did my research, and I went to find out, different factors that are standing out right now. Okay, what's different in the past versus what's different right now. So in the past, two main things stood out to me. Okay, the first thing is that there was no heavy-handed government intervention. Right now, we are seeing the type of intervention and active involvement by the government that we have never ever seen before. Okay. Secondly, is that previously there were no safety measures in place during the past few crises, which is much more different from now. Okay. So I'll be moving a bit faster on this just to give you a whole overview snapshot, and we'll zoom in later. All right. So what are we facing today? Right now, today, these are the four factors, the key factors that I believe is helping to prevent prices from collapsing. Okay, prices have only dropped 1.2%. That is not a collapse at any time. To me, that is prices just moving stagnation, sideways movement. Okay, so right now, what do we have? Right now, there's strong government support and intervention in the market itself. We've never seen so much intervention before, and I'll elaborate later. Number two is that there were multiple safety measures in place even before the coronavirus happened. Okay, multiple safety measures before coronavirus happened. Number three is that there's been a strong demand from investors, which I'll share with you as well, both local and foreign. And number four, one of the key factors is also that developers right now, compared to last time, they have time. Developers have time. So keep that in mind. All right. So let's dive right in. So number one, government support. Now, take a look at this article from Business Times. It was on the 6th of May, all right, it says, government rolls out temporary relief measures for the property sector amid the pandemic. Now, what this tells me is there's a lot of active intervention in the real estate market, which is very different from the stock market. Okay, you don't see government roll out temporary relief measures for property and stock market. You don't see that. Sorry. So why I believe this is so is because in Singapore, a lot of people have their retirement. They have a lot of their assets and their wealth locked up in their homes. Okay, their wealth is in their homes, in their properties. So if the government allows this to crash, what do you think will happen to a lot of people and their retirement homes? And in Singapore right now, we're facing an aging population. Okay, a lot of people are quite elderly or aged. I cannot say elderly, not old, not old. Okay, but a lot of people are aging, and they need that retirement fund that they put in their property to retire. So if the government allow the property price to crash, what do you think will happen? Not so good, am I right? And the election is coming, not so good, am I right? If you agree, type in yes in the comment section below, so I know that you are listening, I know that you are engaged, and I can move on, more energy. I just want to see all of you guys enjoying your Friday night. Thank you for joining me once again. Instead of watching Netflix, you're watching Ianflix. All right. So let's look at what the government says about government support. Okay, they say that individuals can actually apply to defer their property loan. Previously, we've never seen such things before. Okay, we've never seen the government, all right, having such a heavy hand on banks, forcing them to allow individuals to defer their property loans for 6 months plus another 6 months. Okay, and SMEs also get cash flow support. And right now, you can actually defer your loans. All right, either you can choose either to defer your principal payment or your principal and interest payments, and you can defer it all the way until end of this year. all the way. Okay. Now, why is this prices crash during a recession or crisis? Is because during a recession or crisis, what tends to happen is, people start to fall out in terms of their mortgage payments. They cannot pay. Maybe they lost their job, business not doing well. They cannot pay their mortgage payment. And when they cannot pay the mortgage payment, the banks also can't jump. The banks will want to repossess the house. And when the banks foreclose this house, the bank's job, the bank don't want to find the highest buyer. Okay, if you do not know already, the banks, when they foreclose your house, they are not trying to find the highest buyer. When the banks foreclose their house, they want to sell ASAP. The banks want to sell as fast as they can. They want to get the money back as fast as they can. So let me ask you this question. If you are a bank today, you have maybe a few houses on your hands that you foreclose. If you want to sell as fast as you can, what will you do? You will sell high or you sell low? Let me know in the comment section. Will you sell high or will you sell low if you want to sell a house as fast as you can if you are a bank? Let me know in the comment section. All right. So I see some of you saying low, which is correct. All right. You want to sell low to sell fast. And that's what the banks will be doing. And that's what caused when one house, two house, three house, it becomes a snowball effect. And that's what caused the whole property market to drop. But right now, what do you see? The government is actually supporting. Okay, the government has learned from crisis to say, this happened before. I'm not going to let it happen. They're doing preventive measures. Okay? And if you have all heard this before, prevention is better than cure. Prevention is better than cure. So the government has put in many protective measures to protect the property market right now. Okay, let me move on. There's even sector-specific reliefs for the property market. So you can see that the government is protecting commercial and industrial tenants. All right. So if a tenant is unable to pay rental, the landlord cannot terminate the lease or evict you due to this coronavirus. So why this is happening? They don't want businesses to fail badly during this time, because when businesses fail, same thing, it will be a snowball effect. People have to raise cash or they need to get out of job, and the property market similarly will take a tumble. They don't want this. They are learning from their lesson. Okay, and the government is also protecting construction companies as well. So for contractors or supply contracts companies, if let's say they are unable to meet their obligation in the contract, non-performance, there's no liability. Due to COVID-19, the government is protecting them, allowing them some time to do their work. Remember this, the government is delaying, giving them time. All right, the government is giving them time. Something to take note, okay? And why the government is doing this, we look at what the government actually says. So the Ministry of Law, you can go and check online, it says that the government recognizes there is a need. There is a need. The government knows that there is a need, okay, to make targeted steps to intervene to help small businesses. The government knows the importance of small businesses because small businesses hire a lot of Singaporeans. Small businesses contribute a lot to the economy. So they cannot let small businesses fail, because that will also cause a systematic slowdown, not only in the economy, but might be as a side effect also, the property market will start to tumble very fast and collapse. So the government is putting in protective measures already. Can you see that the government is taking a very active role? If you can see that the government is taking a very active role right now during this crisis, please type in active in the comment section. Type in active, show some love. I hope you really enjoy this content that I'm giving out. I'm going to be dropping a lot of key statistics and facts and research that I've done. So I hope I don't bore you tonight. I try to be entertaining. I want to really engage with you, and I hope you really benefit from this, okay? And I promise you, if you stay to the end of the video, I'll be giving out bonuses, not only for you as a consumer, but also if you're a property agent today, I'll be giving you a special bonus I prepared just for you, okay? So other sector-specific relief the government has pushed out, okay, is things like loan facilities, okay, that they're protecting. So what is this? That they're protecting SMEs, like I shared before. And just to dive in deeper to explain, okay, creditors, for example, like banks, they cannot chase the SMEs for bankruptcy if let's say they owe a certain amount. Okay, and the creditors also cannot repossess any of their assets of these small businesses. For example, the properties that they own, the plants that they own, the machines that they own. Okay, and for hire purchase agreements as well. If let's say the hirer or the buyer is unable to pay the installment, the supplier cannot actually confiscate the items, and there's not allowed to sue for bankruptcy. Okay, so you can see the government is taking such an active role to protect small businesses and businesses in general. So there's a lot of protective measures by the government right now, which is supporting, all right, keeping the prices up, afloat. Okay. Number two, I'm going to be sharing with you about the multiple safety measures that are already in place before the coronavirus happened. Okay, so some of you already know there's this thing called total debt servicing ratio, or TDSR. Okay, if you don't know what it is, I just want to quickly share with you, because this is not some finance lesson. But TDSR, okay, applies to when you're buying private properties. Okay, so what it means is basically you have a 60% threshold in terms of your mortgage allowance. Okay, your mortgage obligations, you have a 60% threshold. For example, what I mean is, if for example today you're earning $10,000 a month, 60% threshold means you can use only 60% of your income to pay for your mortgage obligations. Okay, and why the government is doing this? What's the rationale? So the rationale is to ensure that borrowers are not over leveraged. So the government has learned previous times why the property market crashed so fast, because one income they could buy multiple properties with no threshold. So people were over leveraging. Over leveraging during a good times, it's okay, everything is fair and dandy. But during bad times, over leveraging bites back. Okay, over leveraging caused a lot of these owners to default on their mortgage payments, which caused them to be foreclosed by the bank and then fire sale. So you can see one property fire sale is okay, but if 100 property fire sale, the market starts to move downwards. Very simple. Okay, let me move on. And since 2010, all right, there's been 17 tweaks and amendments of cooling measures. 17 cooling measures since 2010 to control the property prices. And what Lawrence Wong says is that they do not want the property prices to move faster than fundamentals. Okay, I repeat, they don't want property price to move faster than fundamentals. So what this means is, what happens, what he's trying to say is, when prices move more than fundamentals, sorry, I slowed down a bit. When prices move more than fundamentals, what this means is it's going to be a bubble. Okay, if you are hearing me so far, type in bubble in the comment section, show some love, show some likes. I hope you're enjoying today, because I'll be sharing with you many factors that I believe are preventing the market collapse of home, for the property market collapse right now in terms of home prices. Okay, so there's 17 cooling measures the government put out even before the coronavirus to try and keep prices within the fundamentals. Okay, if you know anything about investing, fundamentals are very important. You want prices to always reflect the fundamentals. Okay, now I'm going to show you this very key statistics. Take a look at this. Okay, it shows you Singapore property prices compared to global markets, compared to a lot of global cities. And I want you to focus. Singapore is actually the bottom light blue line, which I highlighted with the red box as well. Okay, and what this tells you is, if you look in 2013, okay, Singapore property prices compared to the rest of the world, we actually diverged. We went down, the rest of the world went up in terms of property price. And that was because TDSR was introduced. And they helped to cool the prices down. And of course, 17 cooling measures from 2010 all the way until now has been released to help prices stay relatively within fundamentals. Okay, now, if you look at this chart, so you can see that Malaysia, all right, and Thailand, their property prices went up by a lot compared to Singapore. Now, can I ask you this question? I'm not trying to be political or anything, no anti-Malaysia, whatever thing, but I want to say that between the Malaysian economy and Singapore economy, which do you think is more politically stable? Which do you think is more of has more financial stability? Which one do you think there's less corruption? As an investor, you just ask yourself, You rather put your money in Malaysia or Singapore? Okay, let me know which do you think is a more safer, low risk bet for your money when it comes to investing if you are investor today. Okay, is it Singapore or is it Malaysia? Let me know in the comment section below. You can type SG or Singapore. For Malaysia, you can write MY or Malaysia. Just let me know in the comment section below. All right. Okay, so I see some of you putting Singapore. Fantastic. You know, I love Singapore and I really appreciate. I hope after this, you also see a lot of the planning the government has done. I'm very appreciative of what the Singapore government has done to help our Singapore markets. All right. Now, you must understand. Over the past 3 years, property prices have actually went up, even though there's 17 cooling measures, and this is very significant. This is very significant. Okay, over the past 3 years, property prices have been moving up, even with 17 cooling measures. Okay, I don't know if you can see me. I'm stressing this a lot because it's important. All right, why I say this? Just imagine today you're driving a car with a handbrake on. Okay, you're trying to drive a car, but the handbrake is on. Okay, and the thing is, the car continues to move forward. Usually, handbrake on, the car don't move. But now your handbrake is on. You drive the car, and the car move forward. You continue to move forward. Now, let me ask you this question: what happens when you let go of the handbrake? Okay, what happens when you let go of the handbrake? Let me know in the comment section below. You are driving a car today. The car has handbrake on, but it's still moving forward. Let me know what happens when you let go of the handbrake. Okay? Let me know what happens when you let go of the handbrake. Now, if you've said the car is going to fly, it's going to accelerate, it's going to go berserk, you're right. You're exactly right. Okay, this is what will happen if you let go of the handbrake. Now, how do I know this might happen or will happen in the property market? Well, we actually already seen it happen. Okay, let me share with you. Back in 2017, cooling measures were actually relaxed. Two, all right, the SSD and TDSR. I'm not going to elaborate on that. You can actually do your research. Everything is online. You can read the newspapers. But I'm going to show you what happened, all right, when the cooling measures released. One of them that happened is 85% units sold in one launch weekend. Immediately, 2 days, 85% of Twin View condominium was actually sold. And what happened was also, if you look at the property price index, there was a spike in prices. There was a spike in prices. Now, what this tells me is there are so many retail investors waiting on the sideline. There are a lot of buyers waiting on the sideline, waiting to pounce. They want to pounce when they see a signal in the market. Okay, and when cooling measures are released, this is one of the signals that they look for. Hey, opportunity, buy. Opportunity, buy. Now, why am I sharing this? Why is this so important? Now, right now, property price for the first quarter of 2020 has dropped 1.2%. Okay, let's say really very sway prices drop maybe 10%. Okay, can I say that the government now has 17 cooling measures? If they release one by one, they slowly relax. Do you think prices can go up? Do you think that they don't know that they have so many buttons to press now? Now price go down, press one button. Price go down, press one button. Price go down, press one button. And the prices, you know, the cooling measures will help to create this kind of mini spikes and push the market up. Maybe it will not, the market will not go up. Okay, but can I say it will stay relatively flat? It will stay relatively flat. There will be stagnation. Prices might not fall, will not collapse in this sense. It might not go up also, but it will not fall. So that there's so many protection measures that I've already shared. I only shared two only. You can see how deep and how wide the government has actually planned to protect property prices. So if you have learned something so far, hit that like button, share this, all right? Because I know that a lot of people have been asking me this question, and that's why I want to do this Facebook Live to really share with you exactly, all right, what the research is telling me, what the data is telling me, what the figures are telling me, okay? A lot of times people look at data, they look at research, they just go in and go out. They don't understand, okay? But I'm giving you this, you know, I'm trying to piece together the jigsaw puzzle for you to see the whole picture. Okay, so if you really appreciate this so far, I really would love if you just help me to hit that like button, share this, engage in the comments, so I don't need to be talking to myself. Okay, so yeah, thank you so much. Now, number three I'm going to share with you is pent-up demand. Okay, and pent-up demand not only from foreigners. A lot of people say, are you a foreigner? Every time buy Singapore property, but also locals are buying. Okay, and we can actually take reference. Okay, we look in terms of China. All right, when China was the first country to reopen after their lockdown. Now in Singapore, we're having this circuit breaker. Okay, it's not a lockdown, circuit breaker, circuit breaker, circuit breaker. And we see in China when they reopened, what happened was retail malls, a lot of people start to go out. And the thing here I want to highlight is CapitaLand. They actually saw their residential properties boom. Okay, residential sales for the month exceeded 1.3 billion yuan, which was 5.5 times their sales for January and February combined. Let me repeat that. Their sales exceeded 1.3 billion yuan. And this was 5.5 times the sales in January and February combined. So in one single month, they make 5.5 times the amount of sales they make in January and February. Okay, if you think this is pent-up demand, please tell me pent-up demand in the comment section. Type in pent-up demand in the comment section, okay? Because it's so stark. Now, you might be asking me, how I know that, local Singaporeans are also having their demand. Well, you can already see the papers. There's been a lot of purchases in the recent months, even during this circuit breaker. And one thing I want to share with you is, look at this article, okay? Good Class Bungalow was bought at $21.68 million without a viewing. And Good Class Bungalows, if you are aware, okay, or if you're not aware, I just share with you, Good Class Bungalows can only be bought by Singaporeans. Only Singaporeans can buy. Now, what does this tell me? There's a huge local demand waiting on the sidelines. Either they're smart to buy now because they probably have some insider information about all this kind of data and knowledge. Okay, otherwise they'll be waiting and waiting, and then they'll buy when everything reopen again. Okay. Now we must understand around the world right now. What are we facing? The U.S.-China trade war has kind of restarted. There's a lot of friction in that part of the world. In Hong Kong, now China is trying to repossess the country itself. And a lot of Hong Kongers, especially wealthy Hong Kongers, are fleeing Hong Kong. Okay, getting their passports ready, selling their properties. They're running to China, all right, to buy properties there, or they're running to Sydney, they're running to UK, and they're also running to Singapore. Because we must understand, when there's a crisis around the world, people flock to safe havens. And Singapore has been one of the safe havens in the world. Okay, we're one of the safe havens in the world. And our property market, okay, when investors come to Singapore, they don't really invest in our stock market. The Singapore stock market is not where rich people come and play, okay? Our property market is the one that people come and play. Okay, there's enough volume there, there's land scarcity. It's a much more safe investment, okay? Now, we look at foreign investment as well. There's a strong take-up rate despite the pandemic. We can see that for luxury properties, okay, huge amount of people are buying, okay, and Singapore actually secured foreign direct investment of $13 billion in the first 4 months of 2020. Hello? First quarter, we secured $13 billion in investments. Okay? Foreigners see the potential in Singapore. They see the growth even after the pandemic to recover. They want to put their money here with us. And we look at our different articles from different analysts, showing how China and Singapore are both leading the property market recovery right now. Rich Chinese are snapping up luxury properties from Singapore to Sydney. So many examples I can give you, but I don't want to bore you. Okay, but I want to show you a very key statistics. Okay, in the month of May, which was just the previous month, we saw a 75% increase in new home sales. 75% increase in new home sales. And I would highly suggest, I would highly think that a lot of these are either coming from, China or Singapore. Why? Because our lockdown, our circuit breaker in Singapore started in April. Okay, and we've been at it for almost going to 2 months plus. I cannot really keep track. No, but the main thing here is this: it takes 21 days to form a habit. Remember this, it takes 21 days to form a habit. So when people get used to it, at the start, people buying house online, people not so comfortable. Suddenly, people get used to it. All right, now what are you doing every day now? You're buying your food online, you're doing your groceries online. Hey, property online is nothing new anymore. All right, and as more and more people get comfortable, that's why we see a 75% increase, okay, from foreign and locals. People don't even see the house they buy. These are smart people. They know the data that's out there. They know that prices are being protected. So my question to you is this: you want to buy when demand is high, or you want to buy when demand is low? Let me know in the comment section. You want to buy when demand is high, or you want to buy when demand is low? Let me know in the comment section below. All right? Let me know. I hope you're saying low, because that's when prices will be low. Okay, and what can we learn from history? So this is what a property article in the Age Prop. It says that post-COVID-19 recovery in the property residential market is similar to post H1N1 rally. In fact, this coronavirus, people compare with H1N1, they compare with the SARS virus. So let's look at the data, what happened during both of those times. Okay, what can we learn from history? So if you bought a property during the 2003 SARS pandemic, your property price will have appreciated 238%. If you bought it during H1N1, the swine flu, your property would have already made more than 100%. So what can we learn from history? During times of crisis, best time to buy properties. Best time to buy properties. Okay? Now I'm going to share with you this last point. If you really enjoy what I've been sharing so far, do me a favor, hit that like button, show some love. All right, it took me some time to prepare this, do all the research, but I have been receiving this question a lot, so I really want to give back to all of you during this pandemic itself. To have a different Friday night, not so much Netflix, but hey, you're actually gaining some knowledge and content for yourself. Okay. So number 4, I'll go to the last factor that I believe is keeping the property markets protected right now, which is that the developers have time. So in previous recessions and crises, developers are very pressed for time. They have a time limit to sell. Okay, but right now what's happening is that we have a 6-month extension for developers. Okay, developers are given time extension to actually sell their properties. The government has actually stepped in to support developers. The government stepped in to support developers. So if you're looking for fire sale from developers, hello, you think they are pressed to sell? They are not pressed to sell. Okay, most of them are not. Of course, there are some pockets here and there, but most of the developers are not pressed to sell. Okay, and why would the government help? Now, I already shared at the start. If new home prices collapse, what do you think will happen to resale price? Okay, just ask yourself this question. If the new iPhone 12, okay, now iPhone 11, if I'm not wrong, is about $1,300 for a brand new phone, no contract. If the iPhone 12, the newest of the newest, is selling for $500, what do you think will happen to the price of your current iPhone? Let me know what happened to the price of your old current iPhone now. If the new iPhone is launching at only $500, let me know in the comment section below what will happen. Okay, so I see some of you saying the price will be lower. All right, which is true. Okay, if new home prices collapse, all right, high chance the resale market prices will also go down. And the thing is, majority of Singaporeans, like I shared, have a huge amount of their net worth or retirement funds in their properties. So if the government were to allow the free market force, all right, to just cause a crash in property, that means the government just don't do anything. What do you think will happen to the retirement funds of most Singaporeans? Can I say high chance that these retirement funds will dwindle? Okay, and then the government will have more problems on their hands. And with the election coming, don't you think that will affect their votes as well? So why do you think the government is stepping in so hard to help? It's not And not to help themselves, not just to help themselves, like some of you are thinking. I know what you're thinking. It's not just to help themselves. They understand that they need to protect Singaporeans. So I'm very, very thankful. The more you dive into the research to see what the government has planned for us, you'll be very thankful, all right, for what the government has done to really protect us as Singaporeans. Okay, they are protecting the property prices right now. Okay, now I just want to do a recap. 4 factors that I believe are keeping the property markets up right now. Number 1 is that there's strong government support and intervention. Okay, we can see the government is so active, like I shared before, actively helping businesses, individuals, helping rentals. I can go on and on. You can go and check it out, all right? The government is really helping. Number 2 is that there are multiple safety measures even before the coronavirus happened. So the government has learned their lesson from previous crises. Our government is not stupid. They learn from their previous mistakes in a sense, and they take preventive measures now. Okay, they do prevention better than cure. Okay, so they do a lot of preventive measures just in case crash happen. They are okay. That's why we see what happened now. The stock market fall almost 37%. Property market fall only 1.2%. If this is not talking to you, I don't know how to talk to you. Because it's such a big indicator to me the government is helping. Okay, and number 3 is that there's strong demand from investors. Now when the global, okay, if you're an investor, today you got $100 million. You want to put in US, but US and China fighting, you don't know what's happening down there. Okay, you don't dare, you're so scared. You want to put into China, but again, same thing, US and China fighting, and now China also, you don't know whether they'll lock up your capital. There's capital control. You also don't know what to do. Then what you want to do, a lot of the major cities right now, you want to buy into their properties, let's say Sydney, Manhattan, New York, Auckland, property prices, or even in Canada, the property prices are overplayed, bubble. So you look at the whole world map, if you're an investor, $100 million, you see this tiny island in Singapore, okay, the risk of a bubble is so low, the government is politically safe, financially is safe. Is it a no-brainer choice? Can I say it's a no-brainer choice? If you think it's a no-brainer choice, if you are an investor today, please type in no-brainer in the comment section below. Let me know what you guys feel. Let me know what you guys feel. If you think there is a no-brainer choice to choose Singapore, which has low risk of a bubble, financial stability, political stability, we are somewhat of a safe haven, let me know in the comment section below. All right? And the 4th thing, of course, is that developers now have time. The developers now have time. So don't expect to see a lot of fire sales happening. All right, I don't expect there to be a lot of fire sales happening. Of course, I may be wrong, but so far I look at all the data, it shows me that I expect even for the coming months, all right, there's not going to be a fire sale in any situation. All right, there's not going to be massive fire sales. And this is protecting the property market. The government is helping us. So be very thankful, guys. Now, I just want to show you some final words, okay? I have a lot of fear mongers, a lot of people telling me, oh, recession coming, property price crash, property price crash, property price crash. I just want to show you this chart. So this chart shows you the chart from around 2012, 2013, all the way to around right now, somewhat right now in the stock market in the US. And you can see that all the way on the right up, there's been multiple times people have said, wow, stock market crash, stock market crash, stock market crash, bad news, bad news, bad news. And if you listen to any of this, if let's say from the start, you listen to this, all right, if you try to time the market bottom, you would have lost 133% potential capital gains. All right, I just want to leave you with this. All right, if you try to time the bottom, most people lose. Okay, nobody can predict the future. Most people lose, and you have lost around 133% potential capital gains. So I just want to share with you that right now, if you're trying to time the market, don't try to time the market. Read the market, understand what's happening, and take action. Okay. Any point in time during this, if you look at the stock market going, if you bought any point in time, you will still have made money. It's just how much on it. But if you just keep waiting for a crash to happen, you will just lose out. Okay. Now, I just want to say thank you for joining me this Friday night. I know it's TGIF. I know you're with your friends and family. Sorry, with your family right now. No friends. Wing wing. No friends. And I really appreciate you coming to hear me and share about this question that I've been receiving a lot. So if you do have any questions, feel free to message me. My number is 97592826. It's on the screen right now. My name is Ian, and I'm really thankful for you to spend the Friday night with me. Okay, you can follow me on my social media platforms. I'm on Facebook. I'm on Instagram. I'm on LinkedIn. So feel free to just drop me a message or say hi or and follow me. I'll be always sharing very useful content that I think will benefit you for sure. No matter if you are a consumer, you are an agent, this will benefit you. And yeah, hashtag the investor realtor. So if you really enjoyed this, do me a favor, share this. All right, you can tag me in the post. I'll be definitely going to reply you. I'll engage with you. I'm very, very happy to help you in every single way I can. So have a great Friday night. My name is Ian once again. If you want to contact me, my number's on the screen, 97592826. Feel free to give me a call, all right? And I just want to thank you tonight. Like and share this post, and I'll see you soon. Thank you, guys. Have a good night. 9:12. So, yeah, thank you.